the Chaikin Money Flow divergence indicator, which is offered for various platforms on the TradingFinder website. From this section, you can download the indicator file for MetaTrader 4 and MetaTrader 5 platforms and run it on the chart. Additionally, traders can read this page to understand how the indicator works and functions. From the Navigator section, we select the indicator file and execute the indicator by dragging the file onto the chart. Once the indicator is executed on the chart, it begins to identify positive and negative divergences on the price chart. The CMF divergence indicator is a special and practical tool that is useful for traders who are looking to identify positive and negative divergences on the price chart based on the CMF indicator. For example, in this section, the price has created a higher peak compared to its previous peak, but in the oscillator, a lower peak has formed compared to its previous peak. The indicator has identified this divergence and marked it with a trend line. After identifying the divergence, it issues a buy or sell signal. In this case, a sell signal has been issued and a sell trading position is displayed. In another part, the price has formed a lower low compared to its previous low, while in the oscillator, a higher low compared to its previous low has been formed. The indicator has identified this divergence and by drawing a trend line and issuing a buy signal, has displayed the trading position to the traders. In the settings section, under the input section, there are options available for us. In the first part, we can set the CMF period, which is set to 20 by default. In the next section, we can set the CMF volume type, where two options are available, tick volume and real volume. If you have access to real volume data, you can use this section. In the next section, we can set the number of candles for pivot analysis. In the following section, we can select the maximum number of candles between two pivots, which is set to 30 candles by default. In the next section, we can determine the minimum number of candles between two pivots, which is set to 5 here. In the following section, we can specify the number of divergences at each pivot to be analyzed, which is set to 1 by default. If it is set to 1, it will analyze the first divergence from this pivot, or our first pivot, and the first pivot, after identifying the divergence. Here, our first pivot becomes this section. In the next section, we can determine the number of candles considered for breaking the divergence, which is set to 8 by default here. For example, in this section, a divergence view has been identified for us and the trend line has been broken once. If this trend line is broken 8 times, the divergence will not be identified and will be considered a fail, which we can adjust to be more or less. On average, we can set it to the number 2 so that if the divergence is broken twice, it will be considered a fail. In the next section, there is the shift option, which, after the pivot has passed, examines the pivots and issues a signal. Here, the number is set to 2, meaning it examines the pivot 2 candles after the pivot and displays it if a divergence has formed. In the next 2 sections, we can change the color of the sell divergence and the buy divergence to our desired color. And in the last section, we can choose the size of the divergence lines to our preferred size. Well, friends, we have reached the end of this indicator tutorial. I would be happy if you share your comments and suggestions with us in the comments section